Yeah, let's do it. So, the SEC came out with some big news last week, as you had mentioned earlier in the show. This was also a big deal because you, Herwig, had founded a company before Security Token Group called InvestReady that the goal was to help issuers verify the status of an accredited investor. This obviously has a big impact on that business as well. And so, in full disclosure, I am also an investor in that company. But I think that before we kick off the accredited investor definition updates, it may be best if you give our listeners an overview of what that company does and why it's necessary.
Absolutely, Kyle. It's worth mentioning that up until 2013, the liability for qualifying as an accredited investor actually fell on the investor themselves, and they then typically had to fill out what was a self-attestation letter to take responsibility for that. Now, however, with the new laws for equity crowdfunding enabling online investing and general solicitation, aka the advertising of deals, the SEC put in stricter rules for these deals and where the liability now fell onto the issuer. Who is now responsible for taking what the SEC described as reasonable steps to determine investor eligibility, right? So the SEC is, of course, only focused on making sure no one can beat this rule. So they just basically said, look at their tax history. Why don't you have them hand over asset statements and a credit report? Or why don't you just have a CPA and an attorney write a letter on their behalf?
Yeah, that's just not really practical at all. As a reminder for anyone listening, the income threshold determined by the SEC is $200,000 per year in income or $1 million in assets, not including your primary home. In their eyes, you essentially need to have money to lose in order to be eligible to take the risk investing in private securities. While it's not the best or most comprehensive solution, it was a place to start that would be easily verifiable. It wouldn't cause too many headaches. However, it does require a lot of trust to show somebody your personal assets like that.
Yeah, it's very easily said. It's a very sensitive process, right? It's a huge invasion of privacy, actually. Also, alternatively, it's an additional cost incurred by the investor. So neither of these are ideal options whatsoever. I would go as far as to say it's limiting because it has such a high cost and friction that it might actually prevent people from investing as a result of that. So I started InvestReady with a few of my colleagues from a startup accelerator program I was working at with this idea that this process can be simple, painless, and actually even quick. And in fact, just this year, we've been able to announce that you can get certified for just $10 and it can be done instantly in certain cases.
It's truly impressive technology, and so I think it's worth discussing really quickly how that works and why it's so crucial, because it's such a lesser known part of finance, but crucial to capital markets.
Of course, of course. So it's pretty simple, really, right? We spent the last 4 years developing the best possible user experience to easily collect the information we need for InvestReady's verification team of attorneys to issue you a digital certificate that allows you to qualify instantly and programmatically, by the way, for private deals. So we have APIs and other tools to connect to the issuer's site or to the crowdfunding or tokenization platform to host our technology. And from there, users simply upload documents by taking a picture with their phone or simply connecting to one of the many financial technology tools to automatically share their financial information securely to us. Does that make sense, Kyle?
That's crystal clear, I think. So this service is also widely supported in the security token industry by InvestReady, right? When we're talking about Securitize, Vertalo, Prime Trust, PrefLogic, and many others that also use this technology from you guys.
Yeah, I'm guessing by focusing on the price point and the technology really to deliver a great user experience, we've become quickly as a chosen and go-to for the crypto and now security token space as well. And that was the case actually for traditional platforms. So real estate portals like Fund That Flip, Lending Home, AlphaFlow, and even big institutions like Mercedes-Benz Financial Services. They've all leveraged our accreditation technology to power their online investments. So it's by being in that space actually that I saw the security token revolution coming early on. We now even support global verifications, recognizing that digital security tokens will need to support investors from all around the world.
It's really great stuff, and it's clear that having an independent third party to validate accredited status is crucial to the growth of the industry. As an investor, you can be confident your data is safely protected and secured, but it's just as important for companies on the other side of the coin to have an independent third party verifying these investors, preventing any anti-competitive practices between competing firms. However, the one thing that has always been a gripe is that the accredited investor definition is limited. Income level is not a fair way to run our capitalist economy, and many outspoken leaders, including ourselves, have long stood for knowledge-based qualification standards on top of just income level. Yes, wealthy individuals should be allowed to invest, but there should be other ways to prove that you have the standards to properly evaluate risk due to intelligence or classical training, which before today or before this update was never really available.
Yeah, that's right. Unfortunately, since roughly 12 million Americans qualify as accredited. So adding some odd 500,000 people with this rule change doesn't make a huge difference per se in absolute terms in letting more Americans invest, right? However, I have to point out that only 4 to 500,000 investors participate in private offerings each year according to data, which indicates that only 5% of accredited investors are actually even investing in these private market opportunities.
That's an interesting fact. It's crazy to me that the percentage of eligible investors who participate is actually that low, despite the success of this investment class over the years.
And it's funny how you say that because you're absolutely right that you can. It's the best returning asset class. So I can only speculate it's because most accredited investors don't even know they qualify for these deals, and the ones that do typically still don't have access to them. So security tokens are changing the access part and obviously helping educate the accredited investor population, but ultimately we look towards the SEC and legislators to make changes like the one they did to really make an impact on the industry. And I personally think about, adding 500,000 new investors that are already familiar with this industry, or at least finance in general, is a really, really great thing. Think about it, right? So they already are likely to be active investors. So for the sake of an example, let's say only 1 in 5 of them take advantage of this. We're still increasing the active market by 100,000 investors. That's a 20% increase overall. Furthermore, bankers have great access to deals and syndicate networks, meaning we may even see more activity as a result of bankers bringing in more capital thanks to their large networks, not just their own independent wealth. So if you ask me, I think this is actually a major, major, major change. This is major news for the private markets and will lead to a positive change that I believe actually is going to be more visible than people are having kind of as a first reaction to all this, which typically has been the thinking, right, Kyle? Who cares about a bunch of bankers?
Yeah, and I do remember that you mentioned that there also is room for expansion. I'm guessing that means that there may be more qualification opportunities, maybe attorneys, CPAs, or MBAs who may be able to act as accredited investors in the future. That, of course, would be major too.
Yeah, that's what everybody is chiming for. Absolutely, these individuals tend to make or already nearly qualify based on the financial threshold sometimes too, like doctors. The question comes up as to whether they are immune to financial fraud or illiteracy or not. An MBA may have a better case than a doctor being potentially swindled out of a lot of money. So the case for bankers is definitely clear, but maybe not so much for these other licensed professions.
Yeah, I see that. I mean, after all, we did advise the SEC back in 2019 to broaden the definition through multiple approaches, this being one of them. So, of course, we're glad to see that the SEC is listening to the market, which is a good foreshadowing for more potential changes to come. Personally, I'd like to see more scenarios where an individual can qualify, such as qualifying based on passing a dedicated test made by the SEC or qualifying after working at a specific issuer for more than a year. You said last week that your co-founder, Adrian, wrote an article talking about how the rest of the world does it. So what were the highlights there?
First of all, I think those are really great ideas you just mentioned there for qualifying. But yeah, as you said, my business partner, he did come up, we do cover, as I said, global verifications. So ultimately, the rest of the world does do it sort of similar to the US, but typically with a more expansive approach. So for example, in New Zealand, an investor can qualify based on how much they invest in the deal, right? So presumably if you have $100,000 to invest and you're willing to invest it all in one deal, you've probably done your due diligence and you have more in case things go wrong. In Switzerland, the size of the financial threshold actually changes based on your educational or professional experience. And in Canada, they offer 2 tests differentiating between net assets and general financial assets overall. So clearly other countries think similarly in how they regulate, but they've widened the number of qualified people and the different financial tests. So I hope to see the US continue to do the same and add more options.
That's a fascinating breakdown. Definitely go check that out. But I think that's a pretty comprehensive review of the topic there, Herwig.
Actually, Kyle, I do also want to mention that the SEC did also now enable RIAs, rural business investment companies, Indian tribes, and other LLC catch-all types to qualify as accredited investors if they have $5 million in financial investments in the vehicle or business. So more institutional, of course, but still great for Indian tribes too, and more business types to also qualify for these investment opportunities. Again, the SEC here is stepping in the right direction.
That's really great. A cherry on top for this change by the SEC. You gotta love it. I'm excited about where private capital markets are heading and the SEC's intent to expand these definitions and their open-mindedness moving forward, because more investors qualifying is only a good thing in the end.
I completely agree, of course, Kyle. And now actually that is all we have for this topic. So to all of you wonderful listeners, I want to thank you for tuning in to another episode of the Security Token Show. Hope to catch you all next week on Tuesday for number 60.